Welcome to the Morning Download Podcast, your go-to resource for personal finance, economics, and market insights. In just 8 minutes a day, we provide valuable information to help you make better money decisions. Don't forget to sign up for our free newsletter at https://w.morningdownload.com. Subscribe. Let's dive right in. In today's episode, we'll cover the stock market taking a break and updates on big economies, Nike's fall and money placement, the state of the US, UK, and China economies, Nike's disappointing earnings and cost-saving measures, the performance of Ethereum and other cryptocurrencies, investing strategies for short, mid, and long-term growth, and the reminder from Peter Lynch about the value of a share in a company.
So let's take a look at what's happening in the global economy and news. The U.S. economy is showing strong growth, and there are a few industries that are expected to get a boost next year. Housing and cars are among them, with new car sales expected to increase slightly. So if you're thinking about investing in vehicle manufacturers, now might be a good time to do so. But as always, it's important to be cautious. Companies like NIO, Tesla, and Toyota are still facing challenges that could impact their performance. On the other hand, things are not looking so great for the UK. The country is getting closer to a recession, as recent figures show that the economy shrank in the previous quarter. The country's GDP fell by 0.1% between July and September, which is a downward revision from earlier estimates of flat growth. Meanwhile, in China, the situation is still messy. Alibaba, one of the country's biggest companies, is going through internal changes, and the whole country is struggling to recover from the crisis. On top of that, new regulations are putting pressure on businesses. Tencent, for example, has lost over $43 billion in market value after China introduced new online gaming rules. Now let's talk about some global hits. Angola has decided to leave OPEC, which is a blow to the oil producer group. In the ongoing trade war between the US and China, the US is considering adding tariffs on some Chinese goods, including electric vehicles. And in other news, Elon Musk's X company is planning to launch payment services by mid-2024. Nike is taking another hit in the stock market, with shares down a significant 15% in pre-market trading. This decrease comes after the company reported disappointing earnings. What went wrong? Well, it seems that Nike's sales fell short of expectations for the second quarter in a row, despite revenue of $39 billion, which is still quite substantial. It missed the anticipated figure of $43 billion. On a positive note, earnings per share did exceed expectations, coming in at $1.03 compared to the expected $0.85. So, what's the plan moving forward? Nike has decided to adjust its annual revenue forecast and implement a $2 billion cost-saving strategy. This shift indicates a focus on growing profits rather than solely focusing on increasing sales. The company is responding to weak consumer spending by cutting supplies of certain product lines in order to manage costs. Additionally, recent layoffs have taken place, and there may be more to come in 2024. It's not just Nike feeling the impact of reduced consumer spending. Other retailers like Target and Walmart are facing similar challenges and have adjusted their guidance accordingly. This demonstrates that the retail industry as a whole is currently dealing with various obstacles and uncertainties. Let's dive into the world of crypto and see what's been happening lately. First up, Ethereum had an impressive rally in 2023, with its price soaring by over 85%. And guess what? Experts believe that Ethereum is set for another fantastic run in 2024, with a projected price target of $4,000. That's some serious growth potential. Now let's talk about Solana. It recently made headlines by surpassing BNB in market cap, just one day after flipping XRP. Solana experienced an 18% surge in the past 24 hours, which propelled it ahead in the game. Exciting times for Solana enthusiasts for sure. Moving on to Spain, it seems like crypto is gaining some serious traction there. In 2023, the country witnessed a whopping 56% surge in registered crypto firms. 30 companies were granted virtual asset service provider licenses, indicating a growing interest in the crypto space. Spain is definitely making its mark. Finally, let's talk about the future of crypto users. It's estimated that by 2024, the number of crypto users will reach almost 1 billion. Yes, you heard that right. The crypto community is expected to jump to a staggering range of 850 to 950 million users. That's a massive leap, highlighting the continuously increasing popularity of digital currencies. If you're concerned about where to put your money, we've got some suggestions for you. First of all, let's talk about short-term gains. For those looking to make some quick cash, high-yield savings accounts are a great option. You'll find that some U.S. banks are offering returns of up to 5%, which is even better than the inflation rate. Make sure to check with your local bank to see what they have to offer. Moving on to the midterm, index funds and ETFs, exchange-traded funds, are worth considering. These can provide you with some nice gains over the medium term. But what if you're in it for the long haul? Well, when it comes to long-term growth, you might want to consider investing in stocks, index funds, or even real estate. Real estate in particular can offer some impressive returns. If you invest wisely in the right property and make suitable upgrades, you can potentially make even more money. On top of that, you can enjoy passive income through rental payments and take advantage of tax benefits. Now let's take a look at some U.S. cities that are currently great for investment. Detroit, Michigan has a home appreciation rate of 92%. St. Louis, Missouri is at 94%. Fort Wayne, Indiana is at 62%. Toledo, Ohio is at 53%. And Wichita, Kansas is at 97%. Not only are property prices increasing in these cities, but they also have a good home price index, a decent rent-to-income ratio, and low property taxes. So whether you're looking for short-term gains, mid-term growth, or long-term investments, there are plenty of options in cities out there to suit your needs. Today's quote of the day is from the legendary investor Peter Lynch. He reminds us that investing in stocks is not like playing the lottery. Nope, it's actually about being a part owner of a business. You see, it's easy to get caught up in the excitement of buying and selling stocks, especially when you hear stories of people striking it rich overnight. But Lynch wants us to remember that investing is a serious game. When you own shares in a company, you are actually taking a stake in its success. Imagine you're at a carnival and you buy a lottery ticket. You're purely relying on luck to win that big prize. But when you invest in a company, it's different. You become a part of that company's journey. Your success is tied to their success. So the next time you think about buying some shares, remember that it's not just a game of chance. It's about finding businesses that you believe in and want to support. It's about being a part owner and enjoying the fruits of their labor. Take a page out of Lynch's book and approach investing with a long-term mindset. Do your research, choose wisely, and make smart decisions. Remember, investing is about being an active participant in the business world, not just rolling the dice.
In this episode, we covered the stock market's break for the holidays, updates on major economies, Nike's disappointing earnings, the rise of Ethereum and Solana in the crypto market, and investment strategies for short, mid, and long-term growth. Remember, a share is not just chance, but a stake in a company. Thanks for tuning into the Morning Download, your go-to podcast for personal finance, economics, and market insights in just 8 minutes a day. Don't forget to subscribe for more helpful content and sign up for our free newsletter at morningdownload.com/subscribe.